Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra and with me as always is Vivek Iyer. We did see a recovery, a sharp one from the lows of the day, almost a 150-point uptick, but then that was sold into as well. A 70-point fall from the highs of the day again. The mid-caps, they are doing well, but again, market has been quite volatile. We do have a truncated week. It's a holiday tomorrow, so multiple expiries this week.
And tomorrow we must all not forget to exercise our franchise as well. Well, like I said, it's a very volatile trading session. Expiry has been pulled forward a day, and on the back of that significant volatility. A lot lined up on the show, a lot of stocks that are moving around on the back of results. So let's start off with the top headlines. Market trades near the flat line. Metals lead along with PSUs and capital market plays. Realty index is the top loser, while IT stocks trade sideways ahead of Infosys Q3 earnings later today.
ICICI Lombard shares fall despite a healthy top-line performance. The management tells CNBC-TV18 that they have been able to narrow down the gap in motor segment in Q3 and they welcome any move from IRDAI on regulating commissions.
Tata Elxsi shares fall after Q3 results. Motilal Oswal reiterates its sell rating on the stock with a price target of 4,700 rupees a share. This implies a potential downside of about 19% from the current levels.
Angel One trades higher as Citi initiates a coverage with a buy rating and a target price of 3,215 rupees on the stock. Brokerage says the company's business agility underpin constructive stance.
And shares of Indus Towers trade with gains on the back of CLSA's high conviction outperform rating. The brokerage cites Indus Towers as a key beneficiary of Vodafone Idea's AGR relief and fundraise ahead.
Okay, those are the top headlines for the markets. As we pointed out earlier, continues to be volatile. We do have the Nifty at 25,700. Nifty Realty continues to be under pressure. So does the IT index. We do have Infosys, which will report numbers today. But other than that, the market breadth continues to be in the favor of advances. So far, the headline too is doing well. But yes, a lot of these big names, which are at the day's low as we speak, Infosys too has come up from the highs.
That's right. Infosys has come off with highs. Significant, profit booking seen in Tata Elxsi. And if you look at the two-wheeler names, especially in the last half hour or so, most of the two-wheeler names like Hero Motors, names like TVS, names like Asha Motors, all of these names have seen a significant fall from the day's highest point. Some pressure seen across a solar PV module maker as well. Premier Energy, that particular stock, has cooled off after the last couple of days of rallies that it has seen. And that particular stock now trading with a cut of over 2.5%. On the other hand, two stocks that we highlighted yesterday on the back of an opportunity coming in as far as the generic version of Advair is concerned, and that is Aurobindo Pharma. One of the companies that it acquired actually has received the US FDA approval. That particular stock doing very well in the session. On the other hand, a reduced opportunity for Cipla is something that is keeping that particular stock under pressure. And like we mentioned, the mid-cap IT space is something that is seeing significant selling pressure. But Shadowfax's rupees 1,900 crore IPO opens for subscription on January 20th with a price band of rupees 118 to 124 rupees per share. Our colleague Rima caught up with the top management of the company to understand the IPO of the company's business and growth prospects. Let's listen in.
We're looking at a very, very healthy growth moving forward. Last couple of years, FY23 to 25, we were growing at about 32% CAGR. This year, we have seen an explosive growth of about 68% in the first half. Roughly about 55% of our growth came from e-commerce. Close to 80% plus growth came from hyperlocal, which is largely driven by the quick commerce boom that we are seeing in India. We expect the growth trajectory that we have shown in the last couple of years is going to continue over the next 4 or 5 years.
Okay. Your top client, I presume it's Flipkart because they are an investor in the company?
Not really.
Okay.
Yeah.
So who's the top client? Because
it's probably one of the largest e-commerce platforms today, which has the largest share of the e-commerce deliveries happening in India, which is Meesho. So,
okay.
Yeah.
So Meesho is your top client. Got that. So can you break up how much comes? So Meesho, we know, contributes about 47, 48%. Who are the other big clients? And what about these quick commerce companies like Blinkit, etc.?
Yeah. So our top 5 customers give about close to 74% of our revenue. This number used to be closer to 88% the year before that. What we see in our business is you typically build business with anchor customers. As you stabilize your network, as you stabilize your customer experience, you essentially bring in more D2C brands, more smaller sellers. Today, our fastest growing segment remains the D2C and the brand segment, which is actually growing at a triple-digit pace. And typically, it's a market structure sort of an issue.
D2C brands would be what kind? Which
think about any brand which are .com towards the end, any offline brand that you would be ordering from. not limited, but to the likes of Puma or an Adidas or let's say a Rare Rabbit. All of these brands we classify as D2C brands.
And their contribution to the top line is?
Their contribution last year was close to about 25%. Today that number is basically the fastest growing bucket in our business.
The D2C business. Yes. Let's talk about profitability. You all turned profitable WebHub in FY25 and you sustained the profitability in H1. What drove the turnaround? Is profitability sustainable? And margins are currently at 2.8%. What are the levers to expand margins?
See, one of the important things for our growth and as well as for our margins is our focus on value-added services or the differentiated offerings. So we have a good percentage of our business focusing on these difficult problems like reverse logistics, wherein a delivery boy comes at the doorstep, does a doorstep quality check, and then picks up the product and sends it back to the seller. Similarly, open box deliveries. So a good, healthy 40% of our express business is actually contributed by these differentiated services. The same-day delivery service, which the D2C players are actually loving it with the coming of quick commerce as well. So this is what has these difficult problems, solving these difficult problems have allowed us to have a better profitability matrix in the ecosystem.
The contribution from the value add, same day delivery, reverse logistics, etc.?
So for our express parcel business, it is close to 40-45% of our total revenue that is coming in. Okay. So that's a very niche sort of a offering that we give to the market. And
express is what percentage of the overall orders?
So express is roughly 70-75% of the overall.
So about a third, about 30% would come in from these value added. Yes. So now if we have to talk about the levers to expand margins, one of course is scale. Second would be this value add segment.
So value added services, doing differentiated services is something which is a unique skill about Shadowfax, and that is the reason why we have been profitable over the last few years at even a lower scale. See, logistics businesses in this country, while on one side you need to do a lot of innovation, the other side, these are all operating leverage businesses. You need to invest in a massive network to set up that network to deliver to, like today we deliver to more than 2,500 cities of the country. So you have to invest to set up that network. So operating leverage in a business like logistics is very, very obvious way to grow margin. Given the kind of healthy growth that we have demonstrated in the past and the growth that we are looking at in the future, we believe our profitability is going to expand. If you look at earlier this year, as we have grown healthily, our margins have actually expanded. Last year, we did 2% EBITDA. This year, in H1, we went to 2.9% EBITDA. So we are one of those unique companies which is growing as well as basically growing on profitability.
You know, I remember in one of our earlier conversations, you said your closest competitor would be a Chinese company, G&T Express.
Yeah.
Right? So compare where Shadowfax is today with G&T Express and what kind of steady state margins do they operate at when they achieve that scale and operating leverage?
Yeah, see, typically if you look at some of the global markets, margins operate in about early teens sort of a level in a steady state, and those are something, while we can't give you a number about our business, we think that some of the global mature businesses operate at that level.
I remember you also saying that logistics business is sort of a graveyard industry because so many 50+ startups were founded around the time when y'all were incubated in 2015, and now very few survive.
Yeah. No, see, it's a very, very interesting business to build. This business has been built by a lot of rigor, by a lot of frugality, by a lot of capital efficiency by us. In logistics, you cannot justify marketing cost, you cannot justify any kind of a burn, and that's the reason, if you see, we have been operating with a profit. Today, we have delivered 10 back-to-back quarters of profitability in our business. This business, till date, we have raised 1,200 crores. We have spent about close to 700 to 750 odd crores as part of our operating burn as well as part of our capex before we broke even. We would probably be one of the most capital efficient companies in this country. And yes, while the entry barrier to enter into logistics is probably lower, the barrier to scale is very, very high. You need capital, you need a network to set up a pan-India model. You need an operating model which is differentiated. And again, our focus on value-added services keeps us apart.
All right, that's all about Shadow Facts, the IPO that's upcoming. But we'll slip into a break now. The countdown for Budget 2026 is underway. The most influential voices decode and analyze the impact and policy decisions from the Finance Minister. We bring you a power-packed lineup throughout January and on the budget day as well. Helios Capital's Sameer Arora for all things market, followed by JP Morgan's Sajid Chinoy to discuss the macro signals. We also give you insightful analysis from industry veterans and Dinesh Kanabar and Ashok Wadhwa for the tax rhetoric.
Welcome back to Mid Cap Radar. Well, one particular stock that's done very well post its results is Union Bank. In fact, it's taken up the entire PSU banking basket along with it. Gaurav joins in with the key internal details from the Q3 results.
Well, as if you look at Union Bank and if you look at the pre-provisional updates that were given by the bank, they were not that strong. So that is something which is actually surprising the market, because if you look at results and the numbers, they are actually higher than the street's expectations. So let's go through the numbers first. Net interest income, that was flat on a year-on-year basis, but it was again higher than the street's expectation, almost by 3 to 4%. When it comes to PPOP, which is pre-provisional operating profit, we saw a 2% increase on a sequential basis, again higher than the street's expectation. And the key positive point was the provisions. If you look at the number, now that has declined almost by 76% on a sequential basis, and as a result, profitability that increased almost by 18%, 10% ahead of the street's expectation in terms of profitability for the bank. Apart from that, this also reflected in net interest margins that expanded almost by 9 basis points. Remember, there was a rate cut of 25 basis points which was announced in December, and banks, if you look at other banks as well, who have reported the numbers so far, 9 basis point of increase in net interest margin is something which is positive for Union Bank. Other than that, credit cost, now that declined almost by 13 basis points. Now it stands just at 0.09%. And as a result of both these data points, if you look at ROAs that have increased almost by 19 basis points, now it stands at 1.35%. Another key thing to highlight is that the gross NPAs, they have also come down almost by 23 basis points for the bank on a quarter-on-quarter basis. So all in all, a very great set of number for Union Bank. Let's also not forget about the deposit growth. That was flattish on a year-on-year basis, but if you look at CASA ratio, that has improved almost to 33.96%. So that is also something which is positive. And as a result, stock has taken an increase of more than 5% in a trade today.
Oh yes, it's now 8%, Gaurav. The time you were speaking, the stocks saw higher levels. Thank you so much for making sense of the numbers and talking about what worked for the bank this time around in Q3. Let's now move on and welcome Ajit Mishra, SVP Research from Religare Broking, for a technical check on the markets. Ajit, good afternoon. Thank you for joining in. It's been volatile so far. We did see that recovery from the lows, then we have seen a further fall. In fact, now Nifty is below that 25,700 mark. What are the charts suggesting? Will we see these lower levels for a while now?
Good afternoon, Sonal. So yes, in fact, Sonal, last week when we were discussing about the texture has changed for the market the moment we bridge these 25,800, 870 levels, the previous swing lows. And now 100 EMA is basically acting as a breather, means around 25,600 is something that market is trying to defend. So it's been almost a couple of days that we are seeing that index has been hovering around this area on the weekly expiry day. The moment we break 25,600, we are set for the further pain, means maybe close to around 25,300 or 25,150. The long-term moving average is something that market is going to attend. What could negate this? The level, in case if we manage to cross 26,000 mark decisively, then only we can see that, yeah, we are completely out of woods. So as of now, the texture looks negative. It's sell-on-rise market until we break 26,000 mark.
Okay, and Ajit, what are your individual picks for the day amidst a very volatile trading session?
Yeah, Vivek, so considering that we still have certain theme sectors which are playing out well, so PSU's bank, like you were just discussing, then we have metal pack wherein we are seeing fresh traction, especially in the steel counters which were lagging behind a bit. So Tata Steel have finally made a new record high. It's a consolidation range breakout. Volumes are supportive. So everything is aligned for the next leg of the up move towards 198. So here one can go long at current levels with 184 as a stop loss. At the same time, Trent, though we have seen a sharp cut from the record highs, but still struggling. And in fact, there could be more legs to the downside. So 3650 is what we are eyeing in Trent. So one can go short in Trent at current levels with 4,000 as a stop loss.
Okay, all right. Take that point, Ajit. As we speak, thank you so much for joining in. And as we speak, the markets are at the day's low. The advanced decline ratio is worsening again towards decline. So watch out for that one. For now, yes, again at the day's low, IT pack is leading to some of the losses that we are seeing right now. And just look at that. Very close. We'll watch out for these levels as well. For now, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action. Also talk about UBS's top mid-cap picks in our special segment, Mid-Cap Spotlight.
Welcome back to Midcap Radar. Well, in today's segment of Midcap Spotlight, Gaurav joins in. He tells us about UBS Securities' top midcap picks for 2026 and why they are bullish on them.
Well, yes, if you look at UBS report, they're actually being bullish on mid-caps, and this is not because of the valuation, it is also because of the strategic growth that the companies may show. Because they have highlighted one thing, if you look at the valuation, the one-year forward PE, that has come down almost by 10% in a year. But apart from that, if you look at the overall valuation in itself, it is actually at a premium not just to Nifty, but also to its 5-year high average level. But apart from that, they have picked some of the stocks for us with that bottom-up approach. And first, which they have been bullish on, is the Shale Engineering. What they believe is that this company is basically a key beneficiary in the GLP-1 launch, and that is the reason why we may see some growth here. Apart from that, Max Healthcare, the company, they are actually expecting the margins to improve. They also believe that the pricing will also improve for the company, which can benefit them. Other than that, Indian Hotels, if you look at the stock, it has not done well in the year so far, but now UBS believes that from here on, we may see some pickup in the demand momentum, and at the same time, new and renovated room supply can actually deliver growth here. Sham Metallics, that is the fourth company that they are bullish on. They believe that this is actually the company which is beneficiary of rising commodity prices, and they are also adding capacity which can be beneficial for the earnings going ahead. Fortis Healthcare, if you look at the stock and specifically the pharma pack, it has been in focus in the last year itself, and also in this year, UBS believe that the margin trajectory will remain strong, and at the same time, there will also be brownfield projects and expansions which can actually help the company. Astral is another company where they are bullish. They believe that they are likely to gain market share. And lastly, let's also not forget about Delivery. Now, this was actually one of their top picks in last year's list as well, and in this year as also. They believe that the company is in a strong position to benefit from efficiency and pricing. At the same time, given that all the companies where they are bullish, they have given a target price which is as high as more than 20% from the current market price. And remember, the last time they have also highlighted that in 2025, if you look at their top picks, they have actually outperformed the market, not just Nifty, but also the mid-cap and small cap sector. And as a result, we have already seen these stocks have shown some kind of rally. And given that they are now bullish on these companies, it will be really interesting to see in 2026. We have already seen mid-caps have been at a higher valuation, but specifically, it will be interesting to see if these companies continue to outperform the mid-cap index as well as the market for the year so far.
Okay, take that point. Thank you so much, Gaurav, for joining us with that list. That's UBS's top mid-cap picks. Let's talk about the Nifty, the mid-cap IT space. Tata Elxsi has fallen 4% despite reporting a steady set of numbers in the quarter gone by. Reema is joining us to decode what went wrong this time. Reema, tell us more.
Well, nothing per se went wrong in the Q3 numbers, but Tata Elxsi continues to trade at very high valuations. The valuations for the company are 43, 45 times, which is at a premium to peers like a KPIT Tech or a Tata Tech. And plus, remember last week when JP Morgan upgraded Tata Elxsi to a buy, the stock had rallied. So prior to the numbers, the stock was already up 10% on a year-to-date basis. So Q3 numbers are fine, but analysts point out that premium valuations keep gains in check, and today you are seeing some profit booking. In fact, Bloomberg shows that 18 analysts track Tata Elxsi, 12 of them have a sell call, 4 of them hold, and only 2 of them have a buy call. And if you just aggregate the average target price, it is about a 9% lower than where the stock currently is. One question everyone always asks is, what's the difference between a Tata Elxsi and a KPIT Tech? Because we're comparing the valuations. Well, KPIT Tech gets 100% of its revenues from the automotive tech spends, Well, for Tata Elxsi, as of Q3, about 56%. And this quarter, we saw auto doing well. So automotive segment, which is 56% of Tata Elxsi's overall revenue, went up by more than 7%, nearly 7.5%, 8%. But the other two segments were a bit of a drag, healthcare as well as media. So these numbers and the strength in the automotive business has a positive rub-off impact on KPIT Tech too. But for Tata Elxsi, numbers are fine, Q3. It's just the valuation multiples are at a premium.
Okay, take that point. So valuations hurting the stock today. Thank you so much, Reema, for making sense of the stock moves. By the way, Nifty continues to be at the day's low, and the advanced decline ratio, those lines have actually finally merged, and it looks like there could be some more favor towards the declines versus advances in a bit, but we'll watch out for that one. Grow from the broader markets continues to be on our radar. Reported numbers just a while back looked like a decent set. Their revenues were up 19% on a sequential basis, a strong growth on a YOY basis as well. Q3 did see one-time 425 crore reversal of long-term incentive costs for some exercise that the company had done, and profits also up 25%. So good set of numbers coming in from Grow. We'll analyze the numbers in greater detail. But for now, we'll take your leave on this edition of Midcap Radar. Stay tuned. Your stocks when we return.